One of the most intriguing stocks on the market today is Joby Aviation. The company is really trying to disrupt how we think about transportation today through the air. The aircraft they're building is a combination of a helicopter, an Uber, and a private jet. And if they're successful in what they're building, this could disrupt how we think about at least short-term travel through a few hundred miles over the next couple of decades. So I want to go through their recent earnings report and the progress that they've made. They're probably going to start their commercial operations either late this year or early next year, and they have the funding to get there. So we're starting to see momentum, and this is the kind of thing that can build on itself over time if they continue to hit the check marks they need to. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's dig right into the earnings report, and let's start with the shareholder letter. The big things that you want to look at with Joby Aviation is their certification process. This is, are they making the right steps forward in actually getting their aircraft to commercial operations? They now have 5 aircraft in testing. They're building 1 per month at this point, and then their vertiport that they're building in Dubai is also under construction. The other thing, they can continue to raise money. This can always seem bad for investors because you're going to dilute shareholders. But the way that I think about it in a company like this is what I would call manifest destiny investing. In other words, you're building this huge vision of what you want to build. And actually, the more money you raise, the more value you could potentially generate in the future. Tesla was one of the first companies that did this. Elon Musk would say, hey, we're going to raise $1 billion, but I'm going to make the vision even bigger. So that's something that we need to think about with the money that they're getting investment. Can they actually build out their fleet faster? Can they build out their hydrogen aircraft that have longer range in a quicker manner? That's kind of the way to think about these things. So they always go through the stage of testing, haven't moved a long ways in the past few months, but they are expecting that they're going to get their certification either late this year or early next year. On the manufacturing side, good progress, and they're building what they say is the equivalent of 1 aircraft per month. They're also building out their Ohio facility. They're on track to deliver the first parts from there in mid-2025. This is a pretty vertically integrated company, so that's going to give them control over the entire supply chain. Aircraft manufacturers have kind of gone back and forth from modularizing to vertically integrating, and it certainly seems like if you want to innovate quickly, if you want to have really high quality, vertical integration is really the right way to go, especially with a new aircraft like this. They talked a lot on the conference call about potential defense partnerships. Not a lot that we can say specifically, here's the market opportunity or here's exactly what this looks like in the future. But as they build out these aircraft, there is going to be interest from defense, whether that's going to be combat missions or whether it's going to be something else. The fact that they can exceed 500 miles, including in vertical takeoff and landing vehicles, that's going to be really compelling. They did talk about the defense industry wants to have a longer flight time or a longer range. So the early use cases for the commercial aircraft may be these vertiports where you're going to be flying 10, 20, 30 miles. But if they're going to be selling aircraft to the military, that's where they're going to have to push forward with some of these hybrid engines. And in particular, that would be electric powered motors, and then hydrogen fuel is the way that they would fuel them instead of just being a battery. This is the rendering of their Dubai International Airport facility, their vertiport, and that construction has already begun. So that's where we're first going to see aircraft are actually starting to fly. And by the middle of this year, they're going to have an aircraft over there to begin testing. First customers late this year or early next year. Everything's kind of seems to have shifted back just at least a few months. Expect this to be early 2026, just like the FAA. And it's not just the US and Dubai that are interested in acquiring aircraft. Korea is also an area that they've done some testing. So again, expanding the potential market opportunity. Now, with all of that behind us, and this is really much more of a story stock than it is anything else right now, but we do have to think about the financials. And what were the financials for the quarter? So net loss of $246.3 million. You're looking at about $1 billion run rate for the outlook for 2025. The use of cash short-term investments is going to be $500 to $540 million. So some of these are going to be non-cash costs like stock-based compensation and things like that. What we don't yet know is what the revenue is going to be from their flight services. There was a question on that on the conference call about, hey, what are the economics of each of these flights going to be? Management kind of dodged that. Not surprising, but I do think we need to start thinking about that, and management needs to start communicating, okay, if you have, let's say, 5 aircraft in Dubai and you're flying 20 flights a day, what does the economics look like? What are your costs? What are you able to charge in revenue? It's not necessarily clear. I assume that this is going to be a fairly profitable business, but how profitable? How quickly can you scale this out? There's a lot of questions they need to answer, especially when you're only building 1 aircraft per month at this point. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The balance sheet is pretty strong and actually getting stronger. The $500 million investment from Toyota is not yet on the balance sheet. So when you look at the $933 million worth of cash, that does not include that $500 million that may be coming from Toyota. So you're looking at least a couple of years of runway given the cash that's already on the balance sheet. And don't be surprised if better economics coming as they start to sell some of these aircraft, or at least start to operate their operations in early 2026. There's also no debt on the balance sheet. So those are the kinds of things you want to see when you're looking at upside for a stock, but you also need to understand that risk. The statement of cash flows, this is for the full year of 2024. On the left, you can see the net loss was $608 million, $104 million in stock-based compensation. So that's another high number. Obviously, I would always like to see that come down, but that's a huge part of compensation when you're looking at a company like this, when even the employees are just looking at upside. Cash used from operating activities, $436 million. That too, that guidance that I talked about just earlier, going to continue to be about on that same runway. And then investing activities, $40 million in purchases of property, plant, and equipment. So not a huge capital expenditure business, but that's probably going to ramp up here in the next year or so. So Joby is definitely a speculative investment at this point. They're just at the point where they're starting to build out their manufacturing, starting to build out what does that business model look like. It looks like they're basically going to be testing multiple different business models. Some of their aircraft may be sold to the military, some may be sold to airlines, some are going to be put into service in their ride-sharing product that they're probably going to at least get most of that economics themselves. So that gives them optionality for the future. I like that part of the business. It does seem like this is a good design. And I like the fact that this is an aircraft that has the ability to take off like a helicopter, but has the ability to travel more like a private jet. That could open up a huge number of opportunities when you start thinking about flying around the world. You don't have to actually go to an airport. You just need to go to a place where you can take off from one of these vertiports, which could be placed all over the country. There's helipads all over the place in most downtown areas. And in rural areas, these could just land almost anywhere. So a lot of optionality for the business. And that's ultimately what we're buying into as investors. This isn't one that I own yet, but the reason that I'm starting to pay more attention to their earnings calls, to their financial statements and their earnings calls is this is a kind of company that does have asymmetric potential. If they can build out this Uber-like model, that could be really compelling. And on top of that, they also have the autonomous flying option in the future. I don't think we're going to see that for a little while, but that's something that could be down the road 10, 20 years. These may be just flying all over the place with no pilots in them. So great optionality. The balance sheet looks really good, moving towards commercial operations. I like what I see. Definitely a stock that I could see adding in 2025. Let me know what you think about the future of Joby Aviation. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.